All right. Thank you, everybody, for being here. And thank you to the organization for this great event. So today we're going to talk about institutional Bitcoin. For the interest of time, we're going to go ahead and proceed with quick introductions, and then we're going to get directly into the theme. I think it's a super interesting topic. Even on the what is an institution, right? I hope we don't take too much time defining that. So please, Alex, if you want to start with a quick intro.
Hi, my name is Alex. I'm in charge of the institutional business department at Bitget. So Bitget is a global cryptocurrency exchange. We have both spot and perpetual futures, and we're seeing about $5 to $10 billion a day.
Theodore. Hi everyone, great to be here. Thanks to the organizers. Thanks, Joaquin, for moderating this panel. My name is Theodore. I'm currently CEO and co-founder at D2X. We're building a regulated derivatives exchange from here, Amsterdam. I have a background in equity derivatives trading and made the shift to this new exciting asset class 2 years ago now.
Stef.
Thank you, Joaquin. Hi, everyone. I'm Stef. I am leading our institutional relations at Keyrock. Keyrock is a Belgian-based global market maker. So we're active on the majority of the cryptocurrency exchanges in the world. We act as a liquidity provider and also are pretty active on the DeFi side in building out liquidity technologies for tokenized economies.
Thomas, please.
Thank you. Hello, everybody. My name is Thomas, and I'm the CEO of B2C2 for EMEA. Like some of my peers, I also have a background in institutions and finance. Maybe 2 words on B2C2. Our mission is quite clear, or our purpose in the market is to make it as liquid as possible, to make sure that Bitcoin is as cheap as possible for people to trade or people to use.
And my name is Joaquin Sastre. I'm managing director of Bitgo for the EMEA and Latin American regions. We are one of the largest, if not the largest, digital assets custodians and financial infrastructure providers. We are one of the only wallet providers, for example, for the government of El Salvador and other big players in the market. We process 20% of all Bitcoin transactions on chain, so and we've been over 10 years in the market. All right, so before we start with the questions, I think it's important for us to first define what is an institution. There's been a lot of debate, not only in our industry, but also in other industries about what it is. If you allow me, I would give the first a quick description of how we at Bitgo see it. We think institutions are basically big money makers, asset managers, hedge funds, banks, maybe large corporate treasuries, more than medium companies or others. Not sure if anyone disagrees with that statement. Would that be more or less a correct description?
I think it's been a statement over the years. Institutions are coming, and I think topic of today is also to describe on if that's actually the case. And also a lot of people believe or think that very crypto native companies that have grown very big over the years, like for example B2C2, who's an absolute leader on that front, are considered institutions, and in a way they are. But I think we should really, for the topic of this conversation, really think about, okay, are we talking about the BlackRocks of the world, right? These are the institutions that can actually make a dent. Are they active in this space? How are they doing it, etc.? And I think that's probably more a definition that we see as well of a true financial institution.
And they're basically capable of making a difference, right?
They are, yeah. It's not super straightforward, but yeah, they are. No, they can make a dent actually because of their balance sheet. But yeah, no, for sure.
All right. So now that we agree on that, let's go to my first question. So we've seen a great turmoil in the markets recently. 3 hours, Luna, Celsius, etc., etc. How are your companies seeing the effect of all this on how institutions, your clients, see Bitcoin? Has there been a change on how they interact with Bitcoin, the use cases they're looking at with Bitcoin? What has happened in the last 3 to 5 months in this sense? Thomas, do you want to start?
I'll jump in. Maybe I start sharing my view on the current collapse or downturn in Bitcoin. Of course, price action and the actual value of Bitcoin is what is striking to the eye. But when I look at the institutional space, this is probably not the most important factor. The most important factor is the credit crunch and the fact that after those last 6 months, institutional have taken a step back on the amount of risk that they are happy to allocate to each other, companies trading together, and that is very specific to institutions. And in my humble opinion, this is what probably is the most important factor of the current crisis we have gone through. Here, as you said, only the institutions who had prudent risk management or resilient risk model have been able to go through that period. So maybe what I can offer you is a view from our client base at B2C2. Why would it be interesting? Well, because we are the biggest OTC market maker. We have over 700 clients, and this is data points that are not available to the market. Probably the first thing is, of those institutions, how active are they still? And here I'd like to look at it through 2 angles. Probably the first one being, how much asset do they have? Do they still put to work? Have they withdrawn that money? And from our viewpoint, they have not. And I cannot share all the numbers, but what I can say is the amount of capital at work that institutional clients have with us have not diminished in line with the Bitcoin market. Either the only reason it would have diminished is because they still own assets in digital asset space, and Bitcoin, obviously, this has diminished in dollar value, but in asset terms, it hasn't diminished that one would think.
Has it gone up at all?
Has it gone up at all? It changed, but no, it has not gone up. It has turned over. As I said, some institutions have given up. That's true, but not that many. Some new ones are emerging, which I hope we will be talking about later. The second point is obviously volume. There again, I'll just make one comment. Volumes have definitely diminished, but again, if you look at it by asset value, not as much as one would actually think. In dollar terms, it has. In Bitcoin terms, not as much. So that's an important viewpoint from our franchise. And then I'll probably make 2 quick comments on markets and how it has changed the market. Number one, the most glaring point is the deleveraging of the market. Because people don't lend to each other as easily as it was done before, we've seen a massive deleveraging of the market. What does that mean? What did it lead us to? 2 things. One, it has ironed out the distortion in derivatives market, for example. If you take 1 year ago, you could see basis, for those who are familiar with it, but the difference between futures and spot at 30%. Today it's 0, in line probably with where it should be. And the second point is market spreads. again, relative to the cost of trading a Bitcoin today, the spread has roughly collapsed 50% since the beginning of the year. Meaningful gains for people actually needing to transact in Bitcoin. 50% cheaper. Pretty straightforward. So the reason I mention that is I think for institutional adoption or for the next wave of people trading, we needed a more orderly and stable market. And this is the consequence of this last 6-12 months, is that we are seeing a much more orderly market.
Maybe an enhanced, let's say, best practices, right? Also,
on the risk side, a massive shift.
I agree. Who wants to go next? Alex? Theodore? Please go ahead.
I'll go next then, sure.
So what happened to 380C, Luna, Celsius, it's very unfortunate, and I'm deeply sorry for those people who are affected by it. But I hear from a lot of my institutional connections that they thought this event was very much needed, and it was very necessary, because there were a lot of bad business decisions, bad risk management. So, it was very necessary for something like this to happen so that we become more mature as an industry.
Yeah, maybe to echo some of these points that Thomas and Alex just made, which I completely agree with. I think it's important to understand that the current price action and recent events that we've seen in the space in general, well, personally, I don't like to call them a sort of crypto winter. The reason being that if you actually look at what's going on in the world, of course, our asset class is very impacted. But where it all starts is actually more at a macro level. So I don't like to call it a crypto winter because I think there is a strong case to say that what is going on, this credit bust that we've seen, is a consequence of, one, the leverage we had, the poor risk practices, of course, but it was really triggered by more macro events, I would say. So, of course, as we said, the risk practices were relatively poor in the space. I think everyone, institutions included, has a tendency to sort of turn a blind eye to risk when everything is going well. So in that sense, again, yeah, I agree. The events that happen are good. People are realizing that we were mispricing risk, credit risk in particular, in the space. And now we're in a stage where what we see is we're having more conversations than ever with institutions, and we're talking large institutions, large investment banks, regulators as well, which I think is also a very important topic, of course. And what institutions are seeing now is an opportunity, right? When markets are a bit, I would say, extreme in their behavior, it's very difficult to invest a lot of time and resources into it because everything is moving so fast. Now institutions have the time to really settle down, decide on a good strategic plan, and what you see is institutions are not really backing down this time, whereas in previous crypto bear markets, this was the case. So I think that's a big difference now.
Are counterparties asking now better questions and more questions?
Absolutely.
Would you agree on that?
Yeah, sure. It's become way more professional and probably way more in line that we've seen in traditional finance. As an entity, for example, we are always a borrower of assets, and the efficiency of capital is a topic that is very important for us. And the maturity that we're seeing right now in not only the due diligence questions but also in collateralization ratios, etc. It's just way better, which is again a good piece for institutional adoption down the line as well, because if risk appetite is too high and things may seem too good to be true, it triggers straight away alarms with people that are not used to these type of setups. So I think overall it's been great, and if you see right now the resilience of the markets, if you think about it, it's also been really exceptional, and I think institutions also recognize that. The fact that the industry as a whole is still around, and also how efficient, for example, decentralized credit protocols were working in these times of turmoil, when the CeFi side of things was actually blowing up, shows also the maturity of the industry compared to maybe 2017, 18, when an event like this would have had way bigger repercussions, I believe. So no, the maturity is definitely growing, and we'll see, down the line how that will improve. And I think prime brokerage setups, thorough due diligence processes, thorough on-chain analytics processes, etc., will only facilitate that. But it's an ongoing process.
Do you think after the confidence restores, right? We cannot. I mean, we all know that some institutions actually put a pause in all their Bitcoin activities or what they had planned, maybe. Once all the confidence is, brought back to the market, I don't know, in 12 months, 18 months, no one knows when will that happen. Actually, how will they see Bitcoin? What will be the main use cases they're going to want to attack for their clients? I'll throw some concepts into the conversation. Would it be the next ETF, spot ETF? If it is approved, would it be a real prime broker that gives a perfect market infrastructure to access markets worldwide? How will they think about that?
Can I challenge one point before we go to that topic?
Absolutely.
I actually think we talk a lot about people who stopped investing, and I think not enough about people who did not. And if I can, I'm not going to name anybody, but I see a couple of categories of people. First of all, you have companies like ours, yours to come, but ours who have been there for a long time and that have benefited from 2021. What are we doing as companies? We're investing a lot to expand our product capabilities. New products, so whether it be ETF, ETPs, options, execution services, it's all on our common roadmap. So to the question, our institutional investing, well, if we consider ourselves as institutional, we're definitely investing. I'm not even talking about the ones who are much bigger than us, who have gone a step further and bought all the distressed assets to be able to complete their own offering. We can talk about all the companies that have wonderful projects that have raised money last year. Again, taking data points, 2022, I think 32 billion were invested from VC. And if I look at this year, just to 1st of August, this is the latest data point I have, 18 billion. So actually even more than last year. All those companies, they don't really care where Bitcoin is. They have a plan, they have a vision, they have the capital to execute, they will be executing. So
that's a great point. I do hear a lot of people in the industry say that bear markets are a great opportunity to build, right? And I think the message is still not understood, or people don't take it seriously enough, right? This is true. At least we're seeing this, or we're doing this actually, and we've been doing that in the last 5 bear markets, right? It really gives companies, especially that base their products on technology, to build. It gives us time to think what's next, where we have to allocate resources and execute, focus on, heads down, to build great products, right?
Yeah, I think that's definitely true. And there's an important point here that while there are many opportunities, of course, I completely agree with that. On the other hand, there's also certain difficulties that come during such events, right? Not everyone looks at you the same when you say you're building something in the Bitcoin ecosystem, in the crypto industry in general. To Thomas's point, which is absolutely correct, there is still a lot of funding, but the reality is if you look at where the funding goes, there's less dispersion as there was before, right? So I think even in bear markets, good projects, good companies get funded, right? That will always be the case, especially in an industry like ours. But for really early stage projects, or more problematic even, for very late stage companies, sometimes getting funding now is a bit tricky because they raised at such high valuations just a year ago, and now the market is just very different, right? So they're a bit in that tricky situation. So yes, definitely lots of opportunities, but also certain hurdles that still need to be overcome, I think.
And so what do you think will be the effects of a restored confidence in Bitcoin, especially for the large institutions?
The product that you're building is going to help for sure, right? And I think the more liquidity there will be in the options space or volatility product, etc., will only make it easier for an institution that either acknowledges and embraces volatility or does not, right? To be able to have more, let's say, refined strategies of allocations into the industry. I think that's one. A trend that we're seeing right now is it feels like the fund of fund era is out there, which in the past was a very, let's say, expensive way of allocating money, because you're actually just doing management fees on management fees, and everybody's having the same strategy, which over the last 12 years has been to be, slightly a bit more long than short. But because of the trading products and because of the diversity, because of the talent in this space, you're seeing more and more different strategies. And as such, combining those strategies will give you a diversified opportunity when it comes to the fund of fund space. And the fund of fund is a typical, let's say, allocation strategy that's going to be easier for a bigger institution to get into than actually having direct exposure to the asset class, which I think we should cover as well. I mean, the definition of BTC as an asset needs to be out there for a lot of the major players to have a direct allocation to it. Having it on your balance sheet is something we've seen only with the Teslas and the MicroStrategies of the world, when you're really thinking about the size that they could be allocating, just because of lack of a definition. And that's where I think
how will that, sorry for interrupting you, how will that get defined? Will it be regulators getting together and talking to each other for once? Or will it be the 4 or 5 BlackRocks of the world just deciding on it?
Tricky question. I mean, it's that the institutions are coming, and it was one that everybody was thinking about that question, right? And I think the speed of innovation often precedes the speed of adoption on that front. And as banks, governments are very careful because they do want to have ultimately, they do want to protect, let's say, the community, the people, etc. It's a very tricky question. I don't know if you know the answer for it, but.
Who's going to be pushing? I think there's already a lot of panels of people discussing what regulatory framework should be, but if you're an institution like the one you've named, BlackRock, what are your 2 number 1 problems? Well, number 1 and 2, but let's say your 2 problems, most important problems. Problem A, you need regulation, because your number 1, what you're protecting on your side is your reputation. You're BlackRock, you have 3 trillion under management. Bitcoin will start small, but what cannot happen to them is that small portion they allocate puts them in a difficult position vis-a-vis the regulator. So that's why regulation is needed. The second thing they need is they need credit, as I said, trust between institutions, to which exchanges or regulated exchanges is a decent part of the solution, but getting confidence back into the ecosystem. Again, why? When you have 3 trillion under management, your number 1 problem is to not lose the money. And we see, if anybody doubts that evidence, all pension funds, all large money managers, they've been buying bonds with negative yields for 10 years. They've been paying to get their money out of their bank accounts and give it to a central bank because they deemed it safer than keeping it with a bank. So back to our problem, they need to have the confidence that the capital at work that they will put into Bitcoin or the general ecosystem, they will not be losing it. And I think these, if you ask me the two most important things, they are those two. The rest for them, the cost of execution, etc., this is not what matters to those people.
Yeah, so for me, when you say 12 to 8 months, if the confidence is restored, I don't think it's going to be like a switch on or off thing. It's going to be a gradual process for institutions to gain the confidence back. But we all know that these accidents or hacks or scandals, they'll always be there. So I think it's going to be a repetitive process. But then, like, as we go through more and more of this, I think the institutions and both retails are going to be more confident as we go. And then when you say what are the changes that we're seeing, number one, I think, like we mentioned, more and more companies are becoming more conservative and they're doing a lot more due diligence than they used to. So back then, when a huge company says, hey, lend us the money, we're going to give you a certain yield, they didn't ask any questions. They say, can we have the questions answered? If they say no, then they don't care. They still lend the money. But I think after what happened recently, that's not how it's going to be done going forward. And it shows that our industry is being matured as we go. And number two is that, sorry, I forgot the second one. I'll get back later.
Do you all agree that there was too much risk, uncontrolled risk, until literally 3 or 4 months ago? Let's be honest with ourselves, right?
No, definitely. I think, but I think the key word in all of this is not risk; it's uncontrolled, right? I think risk in general is a good thing, right? The whole financial market infrastructure is here exactly for that, right? Risk transfer, but it needs to be approached in an intelligent way. The reality is, if you trade an asset or you're exposed to something and you're not even aware of the risk that you're taking, there's no way to justify that. You're just sort of the sucker at the table, and eventually someone will pay for it. The thing with financial markets at their lowest level is it's a zero-sum game, right? So you're exposed to something, you're not aware of the risks. Chances are that the counterparty knows the risks very well and they're just exploiting you, right? So it's this piece on controlling risk, being aware of it, that I think is really important.
It's more like lack of transparency, right? Risk is risk, and risk should be an option. Risk should be something you want to take on when you have a full set of information. And we're an industry where, in theory, transparency should be logic because of the nature of the of the technology, right? Transparency should be something that is, viewable for each and every one, and we have not seen it at all. I think the CeFi evolution has been based on lack of transparency, and I think that was more of an issue than the risk, because risk as a concept should be acceptable. It's the lack of information when it comes to going on and taking on risk that is the issue at hand. And also, obviously, I think in an upwards trend, everybody's dreaming of let's say the return on investments that the other guy had over the years, etc. And I think a lot of it was built on speculation and unregulated speculation as well. I mean, that's tricky.
So in that sense, given the regulatory fragmentation we all experience every day in our businesses, is there an immediate need for a self-regulated organism? Large institution players can, build together to try to bring those best practices into the market ASAP, not in late 2024 / Micah?
So maybe I'll quickly take a stab at this one. Since we operate with a regulatory first approach, it's a topic that's very important to me. I think if we're being honest with ourselves, as an industry, we've done a poor job self-regulating so far, right? Doesn't mean that it will still be the case in the future. And I think, to your point, we have to do it. We have to try at least. We've now come to a situation where it's very likely that regulators will have to step in, right, to at least provide a sort of set of ground rules for this whole ecosystem. But it's important that us, the institutional players in industry, join forces with the aim of directing the regulation in the right direction, right? So this self-regulation, lobbying together towards an outcome that is profitable and productive for the industry, for the ecosystem, that I think should really be our mission going forward.
And timing is also important, right? Like, the reason I'm asking this question is because, yes, of course, we all know regulation will come. We've been seeing this for the last, 3 to 5 years. It doesn't come, or it comes in some places, not in others. So you may be in a situation where you are, interacting with a counterparty which is regulated in their own region. You are not regulated because you are in a place where regulation is very light, maybe, or it's inexistent. And that is not going to be resolved quick enough and at the same pace as our institutions are moving, right? We are moving at the pace of Silicon Valleys, right,
exactly.
et cetera.
I think this is spot on. This is the main issue. We're growing much faster because regulation has been equally fragmented in other asset classes. It took 50 years to get a regulatory framework to be able to trade securities. So actually, in regulatory time speed, we're not that slow. It's actually going reasonably fast from a regulator standpoint. From our standpoint, it's a problem. We want the rules of the game. What we 100% don't want is being in breach of any upcoming rules. So it's not even that they exist, is we have to imagine them as an institution and set the rules for ourselves. But who can make a difference? Well, it's large institutions applying for licenses at the SEC, banks applying for licenses at the SEC, so that they have enough of a push that they have to sit down at the table and think about the regulation. Unfortunately, the last couple of months has accelerated the desire of the regulator to do something to protect some of the investors. So that's not my favorite way to accelerate regulation, but I don't think it's a single place. It's everybody needs to push so that it becomes sufficiently important for the regulator to make a decision, basically.
I totally agree. So my last question, we're now running out of time. We're a little bit more focused on what you guys do every day and your businesses and your products. What are you up to? What are you building right now, again, for the next 6, 12, 18 months that you think are going to serve institutions around how they interact with Bitcoin? Alex, maybe we can go in order. Alex, please.
So as an exchange, we've been very fortunate to grow at a very fast pace. When I first joined the company last year in December, we were only 200 people. Right now, we hit 800. And I think by the end of the year, we're looking at 1,000 people. So we've been fortunate in this bear market that our business is doing better and better. And in terms of our products, we are focusing more on the spot side because we're kind of strong on the derivative side, but we're still at an infant stage at our spot. So we'll be hiring our top talents from competitors to really
transparency.
There you go. But yeah, so the spot is also something that we're going to be focusing on. And then on top of that, we're going to be working with third-party partners to, potentially introduce options because that's what institutions want. And, there are players like Paradigm, OTC players. So we are looking at the entire ecosystem to bring on more institutional players to Bitget.
Very interesting. Theodore?
Yeah, so for us, several key areas of focus, two in particular that we've discussed during this panel. One is regulation, of course. As a regulated trading venue, we interact a lot with regulators at the local but also European level. This, to us, is really part of our mission statement. We want to build market infrastructure that complies with regulation and that is inclusive, that is safe, transparent. The other key area of focus, we talked about risk a little bit. We focus a lot on risk management as well. So mitigating credit risk that we have in the industry, counterparty risk, but doing that while providing a capital-efficient exposure to the asset class, to us, is key. And of course, this is an institutional panel, so we're, of course, working with lots of institutions, the goal being to bridge the gap for them so that they can really adopt this new exciting asset class. Stef?
Got 40 seconds left, so
Your
20
2
seconds
cents.
for me, 20 seconds for you.
Just us two.
Yeah. No, in the end, we want to become better at pricing, because at the end of the day, as we are better at pricing assets, it's everybody benefits from it, and we'll do that by expanding the asset classes that we trade, expanding our sourcing for prices, etc., and doing it in a very transparent way. So we invested heavily on the data side to also share insights with not only communities, with partners on what the effect of liquidity is for tokenized economies. That's a priority for us right now.
Like you use the word transparency, which is not very usual in market makers, right?
No, market makers not typically, but no, that's core for us. You've got 1 second left.
Themis, please, take your time.
For us, the mission stays the same. We want to provide the OTC market with as much product as they can consume or want to consume. We want to fit their way of executing, so we're releasing options to be traded electronically in the next few days. We're releasing execution services for people who want to run algorithm rather than give us the risk. In short, we're continuing to expand solutions for clients to access the market.
I wish you the best to all of you. Thank you for being here.
Thanks.
Very interesting.
Thank you, Joaquin.
Thank you, everyone.
Thank you, guys.
Thank you very much to our panel.
All right, guys, we're back at the Bitcoin Magazine analyst desk. I am Daniel Prenz from the Once Bitten podcast. I forgot to say that before. This is Jess, and this is Katie the Russian, the Plan B passport ladies. We're going to talk about that last, I don't know what to call that, to be honest. If anybody was still watching, I'd be absolutely shocked. What should we call it? Institutional buzzwords, maybe.
Indoctrination buzzwords.
Yeah, right, nice. Lots of talk of regulation, Katie.
Yes.
All I had in my eyes is the meme. Look at me, I am the institution now because, you know, I'm Katie the Russian, head of institution at Bitcoin, and my node is settling 100% of Bitcoin transactions these days. What about yours?
Oh
my node
gosh.
tends to do that too.
Yeah.
It's a weird
It tends
thing.
to work.
Like,
Yeah.
how can yours settle 100% and mine settle 100%?
I guess
And yours
there's
too.
Doesn't make any
300%.
How can we
out
do it all
there.
by ourselves?
Are you getting any funding?
Say again?
Are you getting any funding for the...
I should.
We just raised the second round, Series B, and we're going to spend most of it on regulations, of course.
Yes.
We hired 17 lawyers that will help us regulate my Bitcoin node.
Every time I heard cryptocurrency, I had a heart palpitation. I was just like, we're at the largest European Bitcoin conference, right? I kept hearing regulations, compliance, obey. Last time I checked, Bitcoin is freedom and doesn't require anything of that. So,
derivatives, options, risk on, speculative. We're here for our clients. We want to offer them as much as they can.
that's it. Yes.
Funding are like the VCs, the crypto VCs out there. They're falling over themselves to fund these kind of guys. We need more Bitcoin-only venture capitalist funds. And there are a few out there, but we need many more. And that is... us for now. Look forward to the next panel. It's going to be with Stefan Livera, and it's going to be about countries and sovereignty and Bitcoin.
Love it.